ISSAF, even though for a small medium entity it will be quite large, but I'll try to simplify and then pointing some important aspect from this accounting standard for small medium and entity. Before I start my presentation, would you please turn on your video so I can communicate with you interactively? I can see your face and expecting to have some interaction later on with question and answer. Would you please turn on your video? Make sure that you are listening and pay attention on this lecture. Would you please, everyone? Would you please? Thank you. Shan Xiongqi, thank you. And then I'm waiting for other people to turn on the video. Hello, everyone. Are you listening, everyone? Hello, everyone. Would you please turn on your video? Hello, hello. Or at least answer my call. Everyone, could you please turn on your voice? No, video. It is not turn on. And then Assalamualaikum warahmatullahi wabarakatuh. Hello, everyone.
Waalaikumsalam warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh.
Right. Okay. It seems that everyone is busy with their own business, perhaps. You want to go with this lecture or not? If yes, please turn on your video. Hello. Let me wait for about 30 seconds, waiting for your participation, turn on your video, and then I can start my presentation now after that. Yes, thank you, Dini. Thank you, Tifa. Tiana, perhaps. Abdurrahman, Nindi, Mahatna, thank you. Faradiptia, Barida, Nabila, Adinda. Okay, thank you for you who have opened your video. We can start our lecture. I can start it and I will present it continuously, except that if you want to stop me delivering question, I will be stopping and then answer your question. Otherwise, I will continue until perhaps about 45 minutes, and after that, at the end of the section, we have question and answer. I will give you opportunity to ask any question. I'll be happy to answer your question. And well, if you don't want to stop me while I'm presenting the material, you can make a note and then deliver and answer your question later on at the end of the section. Okay, as you can see, would you please confirm whether you can see my share screen? Yes. Can you see my share screen? Yes. Okay. Once again, can you see my share screen?
Yes, we can.
Yes.
Yes, Mr.
Okay. Yes. Thank you. Okay. Thank you. Here, the topic today is accounting standard for micro, small, and medium entities. And this is quite a unique behind this accounting standard. So let me introduce myself. I was part of Indonesian Accounting Standard Board, and luckily I was responsible to set this accounting standard for small, medium, and entity. So there are a lot of things inside of this accounting standard. So it's not only the accounting standard itself, but a lot of discussion about concept, principle, and many important things that we can learn from the process. And I will be happy to share about this uh, accounting standard, all behind this accounting standard with you as part of your process of learning in the context of accounting. Now, before I describe you in detail what we have in Indonesian accounting standard for small medium entity, I would like to show you what we call as pillar, one set of pillar in Indonesian accounting standard. I just describe it in Indonesia here as a name by Indonesian Accounting Standard Board. The first one, we call it as Standard Akuntansi Keuangan Umum. This is accounting standard for publicly listed firm. So specific for publicly listed firm in Indonesia. And then second one, we call it as SAK etap, and it has been replaced to become SAKEP, Standard Akuntansi Keuangan entitas privat. So financial accounting standard for private entity. What is the difference between the first one and the second one? The first one is for publicly listed firm, by means that the owner of the company is a public, it is investor. They buy share from the capital market and then and they claim as the owner of the company, and they are public, just normal people who act as an investor. But the second one, there is no public ownership. It's normally owned privately by a family, perhaps, or someone, and the main source of funding is from their own wealth and their own equity, plus some liability that's come from banking system. Now, the third one, this is the one that we're going to talk about. Yeah, micro, small, medium entity, or MSME. Why I put it MSME, different with the one here, IFRS for SME, because internationally we recognize International Financial Reporting Standard for SME. It has been adopted by Indonesian Accounting Standard Board, but this accounting standard, IFRS for SME, wasn't really fit with the condition of Indonesia. So it has been set in the context of European country mostly, and therefore in terms of the size, small medium entity in the context of European country is much larger relative to small medium entity in the context of Indonesia. So if the IFRS for SME in Indonesia, it's not really fit. It's too big. The size is too big. The recognition, the measurement, all the rules under the accounting standard are not really fit in the context of small medium entities in Indonesia, and therefore we create new one while we put the IFRS for SME to become accounting standard for private entity with the size as big, perhaps as big as publicly listed firm, but they are not publicly listed in Indonesian Stock Exchange. So, and therefore there is a need to create specific accounting standard for micro, small, medium entity. So the name is different here. And in the context of international, you often listen IFRS for SME, a small, medium entity. But we have here, we include the micro ones, small and then small, micro, small, medium, and entity. And we create this one without any reference from IFRS. We refer to some other countries that also rules make accounting standard for their micro entity. But for small medium entity, mostly for other country, they adopt IFRS. Indonesia, we adopted for private firm, big private firm, but for small medium entity, we create this accounting standard by ourselves. So I was part of the team in this setting, micro, small, medium entity accounting standard. And lastly, we also adopt fully IFRS. So we call it as international IFRS, international version of accounting standard. It is a translation version from IFRS as issued by ISSB. It is applied for specific for non-Indonesian firms that are publicly listed in Indonesia. So this different level is for the different purposes. Just what you can learn from this text, then if the size of the company different, you need to be careful when you if you are part of the preparer, you need to refer which accounting standard really fit in the context of your company. If you are the user, then the way you also understanding the accounting standard will be following what the accounting standard that has been used to prepare the financial statement. And that's the way you can really understand the when you do financial statement analysis, for example, because the meaning of the information and the financial statement will really depend on how it has been measured or how it has been recognized and how it has been presented in the financial statement. And it's all following the accounting standard. And we have 4 different type of accounting standard. This accounting standard can be accessed from Android. This is the feature that I capture from my mobile phone. Yeah, unfortunately, it cannot be copied. You can only view under Android mobile phone. So once you are interested to see the accounting standard in Indonesia, those 4 accounting standards are available from the Android, even though it's required you to become a member of Institute Accountant of Indonesia, IAI. So those 4 accounting standards are available in this, and I hope to be familiar with this sign. This is the sign that appearing in Android. Now, going to detail a bit more about situation in Indonesia. It is actually very interesting when we talk about small medium entity Indonesia. In terms of the number, we have more than 56 million small medium entity as described by Bureau Statistic of Indonesia. So, and it was in around 2016, 2017, there is a kind of high demand to set this accounting standard because one rule issued by Indonesian government mentioning that microfinance institution, they have to prepare a financial statement according to accounting standard, but the accounting standard itself is not available yet. The rule is there, but the accounting standard is not available, and therefore it pushes the accounting provision association to set the accounting standard, and we finally set the accounting standard and release it in 2018. And when we talk about accounting standard, this is one thing that you can learn. We normally talk about general purpose on financial reporting. So when the rules release is actually for only microfinance institution, so a financing institution like a small size bank, they have to prepare the financial statement according to the standard. Well, we now and then the need of providing accounting standard, but with the way we provided the accounting standard cannot be specifically for only microfinance institution. It has to be like for general purpose for any industry for any company, any type of company should be able to use the accounting standard. So we set the general purpose of accounting standard and we call it as SAKEMKM. And therefore, more than 57,000 million small medium entities, micro small medium entities in Indonesia should be benefited with the release of new accounting standard in 2018. Right. So now the turn is to look at a bit more detail. Who will apply? Who are eligible to apply this accounting standard? They have to meet the criteria as released by Indonesian law regarding to small medium entity. If we put it in detail, the definition of small medium or micro small medium entity will be you can see it from this Undang-Undang Nomor 20 Tahun 2008 Indonesian law on the small medium entity. It released in 2008, and they mentioned it has to be a single entity that is not part of other company, it's not a subsidiary of other company, or it is not controlling other company. And they have to meet the quantitative criteria where the revenue maximum 50 million if they are categorized as micro one, and then 50 million up to 300 million they are categorized as a small one, 300,000 above that they are categorized as medium, but less than 1 billion rupiah in of their revenue. So this is the scope, right? And because their size is quite small, it's actually, but the quantity is quite large. There are so much variation in terms of how we should regulate or rule these entities. 57 million with different characteristic in a very different industry, and some of them tend to be micro, some of them tend to be small, some of them tend to be medium. So it has to be accommodated all together, and that's the challenge, how to set the accounting standard. And let me describe you some important point and that part. Have a look what we have here. When we talk about creating accounting standard, it has to be based on a framework, as you might understood when you learn about financial accounting in general. Similarly, when we set the accounting standard for micro, small, medium entity, it has to also follow the conceptual framework. But we don't call it as conceptual framework because this is kind of it has been simplified, and we call it as concept and pervasive principle. So we just take some important thing from the conceptual framework for the general purpose of financial reporting for the big company, for the publicly listed firm, but we select some important aspect that really fit in the context of a small medium entity. This is the part that's really important and really interesting to be discussed, because then you conceptually can understand the issue by comparing how situation or condition in the of a small medium entity as compared to the large entity, and how we then apply some important concept in the context small medium entity. So this is several part that we have taken it from conceptual framework. We simplify, and I want to discuss these several important issue in the context of small entity. The first one, when we look at the big company with the adoption of IFRS, International Financial Reporting Standard, we recognize one of the benefit of using international financial reporting standard is from the perspective of new measure, tend to use fair value, right? But fair value is quite good in terms of resulting high quality of information. Yeah, but the cost of preparing a financial statement is quite expensive. If there is a reference in the market value, it might be easy, like for financial instrument. But how about for building, for land? And when we talk about valuing this or measuring this land or fixed asset, company need to pay a price, and that's not a cheap one. It's an expensive one, and most of small, especially micro, they won't be able to pay a price. Even we don't talk about price. They might not have kind of financial accounting inside of the company. They're doing things manually. They manage business manually. So we can't talk about the fair value measure. And therefore, in the context small medium entity, when we refer what kind of measure that will be used in requiring company to measure their transaction, it will be only using historical costs, right? So for things in the accounting standard, yeah, recognition, measurement, presentation, and in terms of measurement, there are two options: historical cost or fair value. But because of small entity, we just like focusing using historical cost. It's cheap. The acquisition cost, when you pay something, when a company pays something, they receive invoice and then they pay us the amount of the invest and they recognize this with the amount, right? But when we talk about fair value, that's such a challenging one, right? Well, how much the market price, or especially when you talk about recognition after initial measurement. At the reporting date, you bought, for example, a company bought an asset on March, and then they need to report it on the 31st of December. Using fair value, you need to find the market fair value, or you need to do some calculation, complicated calculation. You can get the amount of fair value and that date. But using historical cost, just like acquisition cost minus accumulated depreciation, quite simple. And therefore, and the contact measurement for small medium entity just focusing on historical cost. So all the rules and regulation inside of the accounting standard that use word of value has been removed. So we remove all fair value measure, including when you talk about impairment tests, like involving tests of recoverable amount, comparing net realizable value and value end use. So we don't talk about that. We just like focusing using acquisition cost minus depreciation. That's it. Simple, but still useful, and for the user, and less expensive, because we are talking about small medium entity where the ability of financial is much less than big company or public listed firm. How about the liability? Similarly, based on historical cost, we don't like present value of future cash flow inflow. We don't use that complicated calculation. The small idea, liability just measured by cash or cash equivalent or a receipt or expected to be paid to settle the liabilities. So we are not considering about time value of money, because calculating using time value of money is perhaps too complex for small medium entity. And then in terms of assumption, not all assumption has been adopted from the big conceptual framework for this basic assumption for small medium entity. We just focusing on three concepts that really applicable in the three most relevant and applicable in the context of small medium entity. Accrual base. This accrual base as versus to cash basis has been used for big company, right? Everyone agree, everyone know we are for the context of general purpose of financial reporting, we use accrual base. Why small medium entity not using cash basis recording based on what cash has been received or cash has been paid? One of the reasons is that accrual basis is much better. I will describe it later on here, right? But here, just a small idea first. This is interesting to see. If you look at the small medium entity, this is nearly, especially for the micro one, it's nearly the way they recognize a transaction is nearly similar to cash basis. So if they sell something, they don't receive the cash. They have receivable, but the receivable, because the amount is small, then it will be paid later on before the end of fiscal year, even before the end of the month, and in the context of that month, using accrual basis will be like similar to the cash basis. That logic is work if we apply cash basis, then it won't be able to capture the accrual basis one. But if you use the accrual basis one, all the cash basis, it will be captured instantly whenever the accrual has been removed. I mean that if it is receivable, it has been paid. If it is the cash has been received, if in the context of payable, the cash has been paid to the external. So based on the idea, we indeed has to follow still accrual basis, even though it is considered to be complex. But for the small entity, the way they apply this accounting standard will be much similar to the cash basis one, but it doesn't work inversely. If we apply cash basis, it is for sure many accrual or deferral will not be captured in the financial statement. So the financial statement will be much less informative if we use cash basis only. Going concern, as you can see, if a small company, they are not strong enough financially, it can be stopped or discontinued operation to some extent. The chance is much bigger than the big company, and therefore to be able to apply this accounting standard, it is assumed that they, even though small company, they have the going concern one. They will continuously doing their business, and it will be reported, and consequences we can do depreciation, make an estimation, etc., etc. Lastly, but I think this one, the most important one, the best business entity concept. As you can see, entity must be separated from their owner. Right, that's the principles that you, I believe, learn a lot when you are introduced with the introduction to accounting. So they must be separated. In fact, many small business entity, they has been owned by their manager, or manager act as the owner or act as the manager. They don't separate in terms of managing the company, because the company is their own, right? And therefore they tend to combine all the business activity together with their daily activity. Some of the manager perhaps say, some of the owner perhaps say, I will manage this company and I don't want to charge any time or effort that they give for the company as wages payment. It is for free. This is my own company. It cannot be work like that, because when you talk about the performance of the company, you need to also recognize all the effort to create the revenue. And one of the effort, for example, labor costs, you need to record wages and salary expense as part of the company's transaction record. It has to be separated from the owner. If the owner has some amount of money, they want to put the money to improve or to make some capital investment, it cannot be directly recorded as capital investment as an asset, and then the credit is cash. No, it has to be recorded as capital contribution for equity, right? Put it cash on the debit side, and then equity and the credit side, and after that the cash will be used to buy something as part of capital investment, and then crediting cash and debiting asset, whatever the asset they buy, like building or machine or some other capital investment. So this business entity concept will be very important. If they don't apply this business entity concept, they won't be able to apply accounting standard for this small medium entity. So besides this is an assumption, this is also kind of requirement that need to be fulfilled by the company before they can apply before they can apply the accounting standard for small medium entity. So in brief, talking more about cash basis and accrual basis, this is the benefit of using cash basis. Indeed, the expression more accurately about the cash, but misleading in terms of company performance, especially the long-term one. But when you call about accrual basis, it will be like very good in terms of applying matching cost with matching expense with revenue, and therefore we can measure profitability or company performance accurately. Using accrual base is not necessarily that we cannot calculate the cash. It still can be calculated, but it doesn't work inversely, as I mentioned previously. So cash balance can be presented at the end of the period. So if they want it, they can make a reconciliation from changes in the financial position, and then adjust the net income with those changes in the accrual and deferral, and you get how much the cash that you need to know about the company. And accrual basis reflect better real company activities. Now, about presentation, there are a lot of simplification in terms of presentation. I just want to touch one thing here. For example, a statement of financial position or income statement. So income statement, there is no kind of requirement for the company to say following presentation by function or by nature. It's just like open. If the company wants to use by nature, much simpler, just all revenue and then minus all expense. There's no restriction to use that kind of format. So open to make things easier for them, to encourage them to report their activity without any obstacle in terms of preparing the financial statement. So there is no kind of strict regulation in terms of how they present the financial statement, for example, the income statement, for example. And then here, bit more detail, right? I was talk about here, right? And then here in the note to financial statement, as you can see, if you look at the publicly listed firm required under PSAK umum, as I mentioned previously, they're required to do a lot of disclosure, right? Something that cannot be presented in the financial position or income statement, they have to disclose it under the note to financial statement. Not only that, for example, for financial instrument, company need to disclose about the strategy, how they manage the financial instrument for public listed firm, for big company. But here, because small medium entities once again has a kind of limitation in terms of human resource or financial restriction to prepare the financial statement, they tend they're just required to make, for example, a list of additional information. So no disclosure requirement, rather than just provide, if anything need to be put it in more detail, they can put it in more detail in a form of lease, not disclosure. Like for example, in the context of financial instrument of big company, they are required to make how they how their strategy regarding to manage their investment in a form of stock or bond, for example. They have to describe it in detail that. But here, just list, additional list. So it's much simpler rather than disclosure requirement as mentioned in the public listing from accounting standard. Now, we move to the first part of financial position. So we finish with all the principle and concept. So in general, I have explained it to you. Now we focus on the certain account under financial position and income statement. And we focus on those financial statement. Why equity or statement of changing equity and statement of cash flow is not rule or is not set as accounting standard required for the company. Once again, the reason is first, if user want to see how the cash flow of the company, it can be easy, right? Derived from financial position and statement of income, right? But it doesn't really work if we use that logic for big company. For big company, they have a complex transaction to derive from accrual-based income statement to become cash flow is harder. It's require sometimes require good accounting information system. But for small medium entity, it's quite simple in terms of their transaction, in terms of the format of their financial statement, in terms of the format of their income statement, and therefore information about statement of changes in equity or statement of cash flow, it can be easily derived from those two main financial statements. So there is no requirement to present cash flow. There is no requirement to present statement of changes in equity. Those statements can be derived by the user directly by using to mine information under financial position and under statement of income. So now we focus to several accounts, right? Just for example, if you want to ask about another account, how it has been regulated, it has been set, how the accounting standard has been set for small medium entity in the context of, for example, bond or other type of financial instrument, I would be happy to explain it. But here I just take several of example, right? I don't cover, for example, intangible asset in detail, but several things that perhaps mainly become an issue in the context of small medium entity. I will present it briefly before later on I will give you an opportunity to make any question. Here, financial asset and financial liability. One thing, even though small medium entity, they actually sometimes have a good in terms of cash flow, and they are allowed to invest their money in a form of financial instrument. It can be a form of bond, and it can be a form of stock. So we have to provide through and rules how to prepare information in the financial statement if in case the small medium entity have financial asset or financial liabilities. It has been mentioned that small medium entity can own or share stock of publicly listed firm. Yeah. Normally, if they're a small company, normally they have stock or bond with the amount as not as much as a big company. So it will be mostly the chance they will become a minority interest or non-controlling interest. So it still fit in the context under Undang-Undang Number 33 UMKM. And therefore there will be rules or regulation related to how they present financial asset or financial liability. Basically, here we set how they present the accounting standard. We don't use fair value measure, right? For example, measurement of the amount that need to be presented as part of asset or liability. For example, here, as you can see, price at the transaction date. So the acquisition cost is just presented like that. If they bought the financial asset, say, for example, on the month of March and the 31st of December, they have to present it by how much? They don't refer it to the fair current market value of that stock, but rather than just report it whatever you have when you bought it in March. So this is the amount that so the initial recognition measure will be the same as the measurement after initial recognition. How about the inventory? It is interesting to see the inventory. If you look at the big company, publicly listed firm, there are several or many options of accounting standard for the inventory. Given inventory is varies from one company to the other companies, there is retail inventory method, there is net realizable value, there is for agriculture company, and there is a cost method with FIFO, LIFO with its average. For retail company, they can use retail method, right? Or some of the company they can use they can just use fair value method, for example. So this a lower cost on net realizable value for accounting standard to recognize inventory that indicated with obsolescence. So those options is quite a lot, right? But as you can see here, we just focus them required to use cost method. So net realizable value, lower cost of net realizable value are removed from the option of the accounting standard presented here. So by removing values from the accounting standards actually simplify a lot of financial statement, and that should be make easier for them to prepare the financial statement. In terms of recognition, they just recognize it at the acquisition date, right? And the amount measure will be the same, right? Considering we are focusing using cost method. How about recognition and measurement of and presentation for the fixed asset? As you can see here, one big thing that we talk or discuss a lot is related to how we define, right, this fixed asset, right? One thing that I put emphasis here, as you can see here, land fixed asset included, defined here. Land and building owned or held by the company. If you look at this, the definition under IFRS for publicly listed firm, the definition not using word owned, not using word held, but rather than using control. What are the difference when we talk about this definition? Owned means it has to be legally owned by the entity, and then you can claim and recognize asset as part of financial position, right? And we restrict this small medium business entity to recognize right use of asset. And we talk about new accounting standard using lease, there will be a account name as right use of asset. Right? This is kind of another side of lease payment, right? Lease liability. When a company come to an exception to make an agreement of leasing, like lease building or lease land or lease aircraft, so much lease scheme under business activity, and under PSK 73, all lease, right? Except the small and short term lease, it has to be capitalized, right? It has to be reported as right use of asset on the asset side, and it has to be reported as lease liability on the liability side of financial position. But here, in the context of small medium entity, normally they list small item, right? So we are not allowing them to recognize list scheme as part of right use of asset under financial position. So how the best way to cut this? The best way to cut this is just require them, they can recognize their asset, land, building, machine, etc., if they really legally own those assets. Without that legal ownership, the company are not allowed to record it as part of right use of asset or lease liability. So it's mean any payment that come from the lease scheme must be expensed during the period. There is no asset recognition for this kind of lease scheme for small medium entity. So that's one concept that I believe a lot related with how should asset be measured, right? Because consider cost benefit of preparing financial information, it has to be simple. This is the way that we simplify the process of preparing a financial statement for small, medium, and entities, companies. How about the the measurement after initial recognition? Yeah, as you can see here, because we are just following the cost method, historical cost method in terms of measurement, there is no impairment requirement. There is no fair value requirement when they're measuring the asset after initial recognition. We just use the historical cost measurement, and therefore when they measured and the reporting date, they use cost minus accumulated depreciation. It's much simpler for them, right? So this is the clear difference between the big company and small medium entity. And then the recognition, it is quite new to set the accounting standard related to the recognition, even also that's apply in the context of big company, public listed firm. Under the conceptual framework, there is kind of new thing related to the recognition, means remove asset or liability from company financial statement record, right? How they recognize it. Principally, they recognize if an asset is no longer provide the economic benefit for the company, and they can recognize gain and losses during disposal, or whenever they sell or dispose their asset. So if they have a machine, they no longer wants to use that machine, they want to replace a new one, they need to dispose it by selling it, or just like grant it to other people. And there will be different between, if it is they sell it, there will be different between the money they receive and the amount set or presented in the income in the financial statement the book value difference should be recognized as gain and losses. So gain and losses only recognized whenever they dispose or sell the asset. In the context of public listed firm using the general accounting standard SAK umum, any end of fiscal year, they need to report gain and losses, even though they still hold the asset. But here, they can only recognize gain and losses whenever they sell or dispose the asset. That's the different, the main different one. So accounting standard for the intangible asset will be the same as for the fixed asset, except I note here for internally generated intangible assets. So intangible asset can be again from the external one by buying patent, by buying franchise. Right? That's similar, typically the same whenever the company buy an asset, and therefore the accounting standard for the intangible asset will be similar to those for fixed asset, except for the internally generated intangible. It is often companies, startup company, they tend to develop things, innovation internally. So under the normal, the general accounting standard, they can capitalize any cash disbursement if potential future benefit can be obtained for the company. But here, for small medium entity, only generate intangible asset. So all activity to generate intangible asset internally must be expensed. There is no option to capitalize them. So that's one's different. To simplify, less the option, and to simplify the option, only one option. They just expense all activity related to internally generated intangible asset. That's from the asset side. Now we go for the liability side. They're quite simple, as I mentioned previously. Again, consistently, we don't talk about values measurement. We just like cash receipt and cash payment. Right? Here for the liability, how we measure it will be explained later. But here, as you can see, when we talk about liability, one big issue related to the accounting standard setting for this is whenever company has kind of following employment benefit program. When we follow employment benefit program, there is two options: defined benefit plan and defined contribution plan. When they use defined benefit plan, then there is an issue in terms of recognition, measurement, and presentation, because it's involving future value and involving current value. Can then how the company should report the information related to their liability of employment benefit. So here we just focus anything that will be paid in 1 year as part of liability that we recognize as part of liability. So beyond 1 year, there is no requirement to include them as part of company's liability. So it's not fully reflect what the company activity, but it's informing something, at least at the portion of 1 year employment benefit, and it is reported as part of company's liability in the financial position. Here, by definition, liability is recognized when there will be expected future resources outflow to settle the liability, and the amount can be measured reliability How about this? The amount cannot be measured reliability, for example, in the case of lawsuit or in the case of ongoing issue of environmental issue faced by the company, there will be some kind of potential future liability or resources that must be paid by the company if they cannot be measured reliably. It just not be presented in the financial position. But if it is material, indeed, they are expected to disclose. Indeed, although we don't follow actually disclosure concept in the context of small medium entity, but this kind of like exception liability, because liability talk about liability, company tend to hide the liability, and therefore we encourage them to here present any provision or contingency that is considered to be material. They have to disclose it. But if it is not material, there's no kind of provision or contingency requirement. So if you look at the general accounting standard for publicly listed firm, there are 3 different type of liability, right? Like liability with the amount and can be measured reliability, but as the reliability measurement down, then the name become provision, and then down again the name become contingency, right? And these 3 different type are all report for company liabilities. But here for the small medium entity, they just require to present the liability. They don't have to report liability provision and contingency as part of financial position. They just require to indeed focus on company's liability, but not for provision and contingency. And then specific for the equity, if it is perseroan terbatas, right? So it means some kind of public listed fund. The concept of ownership using share is applied here, and therefore there will be account name as additional paid capital to recognize any things above the nominal value. But if it is non-perseroan terbatas, this is type of company in Indonesia, they just like required as what mentioned in the rules. It is open here, ask the company to follow whatever the rules under, for example, koperasi, for example, type of CV, not perseroan terbatas. They just follow as required by the rules. The standard doesn't specific mention about how they recognize and measure and present the financial information. Now come to the income statement. Only 3 more slides, and then after that I open the question and answer section. For the revenue recognition, different from the current practice for publicly listed firm, right, where they require to apply framework, 5-step framework for every company, for every different company, using all 5-step framework. They have to follow that framework to be able to recognize the revenue, right? You can open the new accounting standard under PSAK 72, right? They have to recognize, for example, contract with customer, and then identify how many contract, identify the price, and then allocate the price, and then they can recognize it if all the performance obligation has been satisfied. So one line cut off how the company should measure revenue is when they have performed their performance obligation. If the performance obligation has been complied or has been satisfied, then they can recognize revenue. Here we just still follow several different type of recognition. So small medium entity doesn't apply the same things how they recognize revenue as publicly listed firm. They there is some different type of potential revenue for the small medium entity, and there is kind of detailed rules and regulation in the accounting standard. How should they recognize the revenue? For example, they can recognize revenue if they have the right to receive payment, whether now or in the future. Now means they receive cash in the future, then they can recognize it as receivable, right? Or and then specific, sometimes there is kind of purchase return, there's kind of discount, things like that. We don't rules that under this accounting standard. We just like follow companies should report using gross method. It's simple in terms of preparation for the financial position. So such returns, such discount, things like that considered to be material, and then they are not required to consider this as part of recording the revenue. It's not really accurate, but it's simplified when they present the revenue. And the amount of commission, for example, another type of potential revenue owned by the company, and this is kind of consignasi, consignasi. What is an English there for consignasi? So the amount of fee from agency relationship, they can recognize it as the fee itself, right? They don't recognize it as selling good, but rather than the fee from a company's ability to sell good or service. For the construction contract, amount payable, right? And then if it is about interest revenue or dividend revenue from the dividend, it is recognized when they receive during the period. For revenue resulted from lease agreement, they can recognize it using straight-line method. Yeah, it has been simplified again. Any lease revenue has to be recognized using straight-line method. In fact, there might be some variation in terms of payment from lessee to lessor, but the way we recognize is just focusing using straight-line method. The simplification again. And then disposal asset I mentioned previously, there is will be the difference between book value and the amount they receive, the amount they pay. That difference must be recognized as part of income statement. But again, we don't recognize any unrealized gain and unrealized loss. All recognition and losses here from the realized activity. It means the asset has been disposed. If the asset has not been disposed, there's if under the general purpose of financial reporting for public listed firm, they are required to inform the current value of those assets, and there will be kind of unrealized gain and losses. But here, there is no recognition of unrealized gain and losses. It's just like later on when the company sell the asset, they can recognize gain and loss. Simplification again, but the way we simplify, I believe it's beneficial for you to understand the concept behind things in the accounting. And then expense recognition and measurement principle here. There is no discount present value are considered. Again, simplification. Lease all must be expense. Lease expense. There's no lease liabilities. Right? And therefore there is no right use of assets. So once again, and then if any loan, so financing fee must be expensed and reported as part of income statement. Lastly, for the expense, it has to be measured reliably, but it cannot be measured reliably. Company can use cash receipt or cash paid as part of the amount must be presented under the expense account. I think that's the end of my presentation regarding to the accounting standard for small medium entity. Now I give you the remaining time about 10 minutes. Is that correct? Siapa moderator? Yeah, 10 minutes for question and answer. Happy to take any question. Feel free to ask. And now the time is yours. Thank you.
All right, to all of you guys who have question, please raise hand and turn on your camera.
Any question, everyone? Anyone? There are 28 participants here, or at least 26, right? Minus me and you as a moderator. Happy to take any question. Perhaps one or two questions. We have only 10 minutes remaining, so one question perhaps will be like finishing up in the term of the time is now 10:20, right? If two questions, I make the answer shortly. If there is a question of that. Oh, somebody chat something here. I will share my PowerPoint slide to you. So let me close this and then share it to you from the chat room, right? So let me set this to my desktop. Okay, save as, and then okay, close it, and then attach the file. Oh, can I attach my file here in the chat room?
I thought
There's
it
no...
should be sent WhatsApp, sir.
Okay, by
Or
WhatsApp. Okay.
yes.
Okay. Yeah. I will send it to Ibu Evi, and then you can ask Evi, and then you can send it to the all participant. Let me stop share
Yes,
screen. Let me try once again here. Oh yeah, yeah, it's all from the online one. So while I try to share my PowerPoint, I'll be happy still to open to receive any question from you.
Perhaps, Mr. May I ask
Yes.
one question?
Yes, please. Yes, please.
I am Sari, and the question is, what is the difference between accrual-based and cash-based in government accounting? Thank you.
Okay.
Sir.
Okay, thank you. Okay, let me share this and then. Okay, I have sent my file to Ibu Evi Rahmawati. You can get the file from her, and then you want me to explain one again about the difference between cash basis and accrual basis. So I will illustrate this one. So I have explained it before, but you might haven't been able to capture the difference between cash basis and accrual basis. So I will illustrate how accrual basis differ from cash basis. Right? If a company wants to sell car, for example, with the price of 200 million, and then the buyers want to pay only half of them, from the perspective of seller, they're gonna receive cash because they have only 100 million rupiah. What is the remaining? The remaining, if you focus on the cash basis, there is a remaining record. But if you use accrual basis, there will be another 100 million need to be recognized as receivable. So the as an accountant, you can make it things easier by put it in the context of the journal. So from the seller perspective, when they sell cars with the price amount of 200 million, so the debit side will be cash, right? If the buyer pay them all 200 million, and then the credits will be sales revenue, right? But if they only buy half of them, half of it, 100 million, you need to recognize it cash 100 million using cash basis, and then sales revenue 100 million. But if you use accrual basis, then you recognize it on the debit side cash 100 million, and then again on the debit side receivable 100 million, and then on the credit side sales revenue. So can you see the difference between cash and accrual basis now? So accrual will be reflecting all potential revenue and the revenue that for the company. And when you talk about performance, then sales revenue will be posted into income statement with the amount of 200, right? So revenue 200, and then less expense, cost of goods sold, etc., and then they got a gross profit. But using cash basis, it seems like the company only received 100 million, and then they recognize it again later on when they receive another 100 million. But in the current reporting, they can't capture another 100 million that will be paid later on. So indeed, then accrual basis will be reflecting more correctly about the real activity of the company, including current and potential future benefit that will be received by the company. So indeed, if you talk about general purpose reporting for publicly listed firm, both accrual basis and cash basis has been used. If you look at the cash flow statement, that's cash basis reporting. If you look at income statement, that accrual basis statement. If you look at financial position, that's cash accrual basis reporting. Is that clear enough? If you who was that, Marina or someone?
Yes, Mr. Thank you.
Okay. Okay, I think the time is up now. If there is no more question,
Sir,
yes.
I would like to ask for government organization, what kind of basis that they use? Yeah, so as we know that there is two basis in here, and usually organization in Indonesia apply equal basis. Thank you.
Sorry, can you repeat your question slowly? The first part of your question.
All right. What kind of basis that government organization use in Indonesia, and then
okay.
Yes, and then do they use two basis, since as we know that generally organization in Indonesia apply equal basis. Sir, thank you.
Yeah, for for public sector, yeah, you mean the public
Yes.
sector. So public sector is like government entity. It can be government public sector entity or non-governmental public sector entity like a university or hospital. That's all public sector entities. So for the public sector entity, as you might aware, they historically they use cash basis, but as a cash basis doesn't really reflect so all those accrual and therefore I think International Public Sector Accounting Standard Board has moved and required firm to use accrual basis reporting. So they mostly now use accrual basis reporting. And even though specific for the income statement because they are not profitly oriented firm, right? And they are not they don't have orientation to get profit. Specific for income statement has been replaced to become laporan realisasi anggaran. So anggaran's like it tend to be like more cash basis rather than accrual basis, right? But still for financial position part, mainly has been presented using accrual basis, or in general they apply accrual basis rather than cash basis. Is that clear now?
Yes, sir, it's clear. Thank you.
Any more question? Okay, if there is no more question, I hope that what we have learned today is really beneficial for you, for me, and everyone here. And I return all the time back to you, to moderator. Thank you.
All right, thank you so much, Sir Singgih Wijayana, for the attractive material. Hopefully, it can help the audience to have a better understanding of finance accounting standard for SME. All right, we are turning to the next agenda is photo session. Please, to all of you guys, turn on your camera. All right, are you ready, guys? I count 1, 2, 3. All right, thank you. Turning to the next agenda, which is closing. Thank you very much, guys. Thank you for your attention and see you at the next event. Wassalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi.
Terima kasih banyak, Pak Singgih.
Thank you, terima kasih. Pamit ya.
Oke, Pak.
Thank you, Mister.